But I'd like to turn to Peter and just talk a little bit more about angel investing. And one thing that I'm thinking of that Amit is saying, there's a lot of money out there now for startups. You don't even need a lot now, and perhaps a lot of them are using. Does this mean that there's more bad companies out there, that a lot more are going to fail, and that people who invest in angel investors or crowdfunding investors are just going to lose a lot more money?
Well, first of all, the vast majority of all startups fail. The idea that you have a startup situation like in this country is almost a singularity, and in the US, but it doesn't happen in Europe this way. So, but anyway, what the number of companies is who are formed, the majority fails. The second is if 70% don't make it for the first 5 years, so they're not even entering prep school, if I call that. The third point is on the financing. What are we talking about? We're talking about financing of innovation. Is this a risky business? Yes. Is it profitable? It depends. Would I advise someone to become an angel investor? I would have to know much more about the person before I do that.
Like what kind of things
I would
are you
have to know, because angel investing is probably is 90% of all financing today for startups. Is not the VCs for the startups, is angel. Angel investing is very much sort of uncovered, under-researched, underestimated, unknown widely, undervalued, and unloved sometimes, but overtaxed. And this is the situation in most of the countries in the Western world, with a few exceptions in the US, where this is have a very favorable treatment. What is angel investing actually about? It's about three things. You invest entrepreneurial experience, networking contacts, and capital, and in that order. I think the most important thing is that it's a transfer of entrepreneurial know-how in a society onto a next generation of founders. So it's not about just investing. So a lot of people, millions of people could be an investor, but not an angel investor, because they would have to add something which usually investor can't give. So crowdfunding, it's a very interesting idea, but it has nothing to do with angel investing. And I thought the remark was interesting, that these people who would be crowdfunding become an equity holder are sort of have to have the lead angel or have an angel to do that. But we see a trend that we see much more the structured angel groups. Some people call them super angels or whatever. And we see an incredible development coming up for angel investing in the Western world or in the world at all, in Asia as well. And we almost see the end of the VCs as we knew it, of the LP structure.
When we spoke, I'll stop you there for a second,
yeah.
Because when we spoke, you said that the age of the VC LPs has passed. Yeah. What does that mean?
Well, it basically means if you are locked in a VC, you are in there as an LP, you're in there for maybe 7 years or 9 years. You don't choose on your own investment. You are up to the entrepreneurial spirit of the people who run the fund. Angels are those who have an entrepreneurial experience themselves. They have either started a business before, have made it grow successfully, maybe have cashed out entrepreneurs is a good example for angels, and therefore I think the key is the difference in the entrepreneurial experience, transfer, and working closely with the founder. This is to be done through angels. The other way is financing, and we should make a very distinctive distinction between investing and between angel investors, for the simple reason everybody could be an investor.
Right. Peter, thank you for that. Indiegogo, Liz, do you have any data you could share with us on crowdfunding in terms of people who are repeat crowdfunders, people who back one project, perhaps it succeeds, perhaps it fails, and they carry on, or if a person comes to Indiegogo, funds something, gets burned, leaves?
So a couple things about reward-based crowdfunding. If you put up a project and you want to raise a significant amount of money for that project, call it $100,000 or more, That first round of money you're going to get, it comes from your friends and family and your existing network. The last thing you are going to do is go out to everyone you've ever met, every teacher you've ever had, every friend you've ever sort of known, and then take that money and go to the Caymans and spend it, right? Like, you're not going to do that. You're just not going to burn the social capital. So you hear very few, if any, stories of people who just took the money and left. What you do hear is people fund a technology product, an IoT product, a hardware product, and maybe it ships later than you think it's going to ship, or maybe something slows down the process, but very rarely does nothing come. And when people are contributing into something, you know, there's a lot of motivations for doing that. Sometimes they want the thing. Sometimes they just want to see an upstart company compete with an incumbent player. And, you know, whether they get the thing in June or they get the thing in September isn't really the point. The point is that they're backing the growth of this. And I think one really interesting thing, I just wanted to build on what Peter said here, was people think of crowdfunding as raising money. Okay, that's one thing. There's a whole host of other reasons. There's plenty of funded companies. They've maybe got some seed money. They pour that into a crowdfunding campaign. They get market validation. They get data. They find influencers. And then they get follow-on investment. And VCs, angels, lots of different types of investors are telling companies, crowdfund first, and then we'll invest in you. Right. It's an expectation in some categories now.
But Liz, there was also the other example of Oculus Rift, right? That they started a campaign on, can we say the word Kickstarter here?
On our friends from Brooklyn?
On their friends from Brooklyn. And they got a lot of crowdfunding, and then, they sold to Facebook for $2 billion, and everyone that invested in them kind of said, well, where's my cut?
But they didn't invest. They contributed money in order to get a product. And let me ask you this. If that company had gone bankrupt and creditors had come, would they have said, well, I invested in Oculus Rift, come take money from me too? No, they didn't take their money and say, I'm going to invest, I'm going to give you money for equity in your business. They said, I think this product is super cool and I want to see it made, and I'm going to contribute several $100s to get to that product.
Okay, so in which case are you thinking of, or is there anything in the pipeline at Indiegogo that adds kind of an incentive or even kind of defense for people who put in, let's say, $2,000, $10,000, it goes bust or it goes to $2 billion? Is there any kind of product?
So very rare. So people do put in $10,000, but generally it's not that level of dollars. People, you know, Space IL, a project here that's trying to, you know, bring a spaceship to the moon.
Right.
They ran a crowdfunding campaign, and a random person said, I'm going to give you $100,000 for this because I believe in it. Now, if they actually want to invest in Space IL, they'll call them on the phone and say, hey, I'd like to make an investment, do something different. I think what Indiegogo would love to see more crowdfunding opportunities. Equity investing is open, but open to accredited investors only in my country, in the United States.
Sure, go.
So we would like to see the Jobs Act go further. Indiegogo would love to see that your average person who today can take $1,000 and bet on horses, or put $1,000 into a stock market that may go up or down, but can't invest in crowdfunding today.
The Jobs Act, because I think the latest kind of reports and numbers that we're seeing is that it's not exactly working out, right? A lot of people are losing money on these companies.
I mean, 90% of startups are going to fail. If you put your money...
That's an easy place to go to, Liz.
No, but listen, if you say, look, I want to put $1,000 into a portfolio of startups and see what happens... The startups are not saying we're going to, you know, they're saying we believe in this market, we're looking to the future. But there's no more guarantee there than there is in, hey, WorldCom told me they had a real business, and they were a publicly traded company, right?
Right.
That's a little bit of a different story.
Amit, was there something you wanted?
Yeah, I wanted to make sure that we differentiate. Putting money in an Indiegogo campaign, Amir, is not an investment. It's a way of helping company funding, but you're buying something, you're ordering whatever the product is. It's a way to help the company be funded. It's not an investment. If you've got $10,000 that you want to invest and get equity, that's when you'll go to an angel list and stuff like that and say, hey, I like you as an angel, here's my $10,000, go invest it, and then you'll get equity.
Okay, but...
No,
hold on,
accredited investors, etc. Anyone can pay $100
I want to
buy
ask you something, though. I mean, if this continues and more people are funding, not investing, they're funding the Oculus Rift and whatever comes next, and these companies, after a year or so, get bought out for $2 billion, $3 billion, don't you think that people at some stage are going to say, hey, wait a minute, I got to get something for this?
We've run over 200,000 campaigns. Our friends in Brooklyn have run, call it 100,000 campaigns. You've given me one Oculus Rift. 300,000 other...
The Pebble watch.
They haven't raised $2 billion, right?
Okay.
I mean, we've had Scanadu raise $10 million, Muse raise $6 million. These are opportunities to help build something. If you want to go back to those companies and invest in those companies, $100 does not make you a party to shares of a company. So I think this is an amazing opportunity to say, hey, I may want to go back and invest in this company when they do raise their first Series A. But I also don't think that the vast majority of projects will need equity, right? There's a lot of small business and creative ideas out there, and those people want to back those projects to see that grow.
Cool. I want to zoom out for a second and ask Alex. We've spoken about crowdfunding, angels, VCs, pretty much, in the US, Israel, and Europe. What's the vibe like now in Russia, Ukraine, Lithuania, and Estonia, who, they have a lot of startups, infrastructure. We know that there's conflict there. There's a clampdown on internet. Tell us a little bit about the ecosystem in that part of the world.
The tough question, as I expected. But again, first of all, Russia, Ukraine, Baltic countries, they're all different. I mean, from ecosystem perspective. Baltic countries are like a full-format European countries, members of EU, with all pluses and minuses, taxation, regulations, and so on and so forth. And on the government level, on very high level, they're trying now to support the ecosystem. They provide you free offices and tax exempts and so on and so forth. Provide you the working visa for free, mostly for the companies from the eastern part of the world. I mean, Ukraine and Russia. I started working in Russia 7 or 8 years ago. It was a different story in the times of previous president or interim president Medvedev. It was a different story. Now the story is different. But again, there are ups and there are downs in Russian or Soviet history. But we all know that it never stopped producing great engineers, great scientists,
great hackers,
great actors, great hackers. Hackers are engineers, by the way. And if you use properly hackers, I mean, they may be of very, 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 very good use.
I guess what I'm trying to focus on is there an investment ecosystem in that part of the world that is as
what I'm trying to
diverse and as the rest of the world?
I understand the question. Now, in Russia, Russia probably the first country in former Soviet Union region which started to, say, generate some real, say, IT, internet-related business. We all know these huge, big companies. Mail.ru was just mentioned, Vkontakte was just mentioned, Yandex, we all know about that company, and so on and so forth. Ukraine was traditionally a few years behind. For last 5 years, unfortunately, the situation have not changed much, and today it's still on the same level. But I believe that all the today, let's say, existing conflict today changed the focus of Western world from Russia, which used to be probably the most attractive point for investment a few years ago, to Ukraine. And I believe that most of the money from Western VCs, banks, like EBRD organizations, World Fund, and so on and so forth, they will now go to Ukraine. And I believe that in Ukraine there will be a big progress in the next few years.
Okay, so I'll take that up. I'll ask you briefly, and then I'll go to Peter and Amit. Our panel is about non-stop investments, the ecosystem. what is the kind of disruption and damage that a prolonged conflict can do to, to a place? I mean, we see here in Israel, every year and a half, every 2 years, there is a war, when it's 1 week, 3 weeks, a month, but it doesn't really have any long-term effect on the tech industry. And is that the same in that part of the world?
Well, as Israeli, I can tell you that Israel is used to this situation for many, many years, for 60 years almost. For Russia, the situation is relatively new. Since Soviet Union, this is probably the most serious Cold War situation in the conflict. And the, say, long-term effect of this is not clear yet, but it is definitely very, very negative. And probably the bottom is not reached yet. And we will see the situation worsening for a couple of years at least. Does it mean that Russia will not survive as a country and startups will not go farther and produce good products and good technology? It does not. So it is again the personal choice of every investor.
Peter, I wanted to ask you, who's most vulnerable to kind of geopolitical disruptions in the food chain of the investments? The angels, is it the VCs, is it the government funds?
Well, if you refer to Europe, maybe, I don't think it has a lot of damage. There's not very much to damage in Europe in terms of equity culture and in terms of angel investing and in terms of VC. Yes, of course I say that. To say the best is for Europe, it's an underdeveloped area in that respect. I don't want to bother you with numbers. If you look at angel investing in VC, add it up. You have in the US about 100 or 120 US dollar per capita. In Israel, 250 last year. If you take the second quarter of this year, it adds up to 500 US dollar per capita of the population. EU is about 10 to 12. Now, because the hard part is the Eurozone is about 5. And China is already 3 to 4 per capita of the population. So there won't be a lot of damage done in Europe as to that. I think it is completely underestimated and not understood in Western Europe the importance of the equity financing of innovation and the role of the early seed or pre-seed angel investor, because that is going to be the key. And therefore, with all that capital or money flowing around, I think it's much more important that not only capital is invested. The debate in Europe now where they say, oh, we increase capital investments and the government has to come in and so on. This is all fine. But this is going to be a huge waste of money and capital because the people think that if you spend money, you have already achieved something. But the key is the smart money where someone's there who detects the right place, defines where to spend the money, and that is the key difference, whether you spend money on infrastructure projects where nobody needs them anymore, or whether you have it on innovation, and which is going to be the future thing. And therefore, I think whatever we heard on crowdfunding, we have to differentiate very clearly what are we really talking about. And therefore, I welcome all these initiatives, but we have to be very clear about this. It has not very much to do with the financing of innovation in terms of transfer of entrepreneurial know-how.
Gotcha. Thank you. Amit and Liz, I wanted to try and get your sense, and I'm circling back to where we began. With a lot more options available for entrepreneurs to get crowdfunding, angel investing, is that changing the valuation of companies? Do you see that, and maybe even Vered also, if you're seeing when companies come to you for tax advice, are they worth a lot more now because of the ecosystem than they did before?